Yep, this is Luis.
Hey Luis, this is Tyler. How you doing?
Good. How you doing, Tyler?
Good, good. Sorry I missed you earlier. I probably jumped the gun a little bit early on the phone call.
Oh, no worries. It's all good. I was just driving home. It's just really loud with the road noise in the truck, the big tires. It just makes too much noise. It's really hard to hear, and I'd rather not do it while I'm driving. So,
Yeah. What kind of car do you have?
oh, I got a Denali with the 2011 Duramax HD.
Nice, very cool.
And it gets the job done. We got an RV we pull and we go. We haven't been camping this year because of everything that's been going on, all the craziness, but we're hoping to get out there and go camping again.
Very cool. Where do you guys usually go?
We go all over. We like going to the dunes a lot, but we've been down to Rocky Point. We've been to up north towards or in Flagstaff and Grand Canyon and a
Nice.
couple other places around California.
Very cool. I love it. I know that I have a Pennsylvania area code. I live over in Fountain Hills.
Oh, Fountain Hills, Phoenix.
Yeah. Oh yeah.
Oh, okay.
Yeah, I love it out here. What part of Arizona are you guys from?
I'm actually from California. I moved here back in 2010.
Okay.
My cousins, I have cousins out here that I always would visit. And so I always told myself I wanted to move out here. Finally did. I had the chance to get a job out here and it worked out. And I've been out here since.
Okay, very cool. Well, I love it. Arizona's hot, but it's a good area to be for sure. Really quickly, Luis, I just want to let you know kind of what my job is. It's really just to walk you guys through the programs, figure out if they're a good fit. If not, no worries. They're not mandatory. Um, Really, at the end of today, we'll kind of have two options, either to apply for the programs that we take a look at, or we can decline the coverage altogether. The pricing of the programs is going to be based on three simple things: age, health, typically the last 10 years, and then the amount of coverage that we'll be applying for, and the type that we're going to be looking at. I know that we're looking to protect the mortgage overall, right?
Correct.
Okay. And so right now, I see on the form you guys had listed between 250 and 450 is about how much left you guys have, correct?
420 to be exact and change. 420.
Okay, so about 420. Gotcha. And is it a typical 30 years left on the mortgage?
No. So we've been here. What? We're going on two. No, we're going on what? We bought the house last year. So yeah, we've been here for about a year. So yeah, we got about 29 years left. Yeah, 30 years.
Yeah. Okay. Well, good. Very good. And about how much are you guys paying a month? I see it's under 4,000, right?
No, no, we're less than that. We're at about 30. Well, it was about 2,900 this month. Escrow and taxes, I saw went up just a bit, so I'm paying 3,000 and change.
Okay. Do you guys put anything extra month to month to lower interest? Maybe
Yeah,
like,
yeah, I try to. I try to put a little bit extra. I'll throw in like 100, 150, $200 every month or every other month. This month because it's the holidays, I have not thrown extra money at it, but been thinking about it. Been thinking about it. I'm hoping to get some money back with my tax return this coming tax season, and also throw in my Christmas and my bonus at it as well. So,
okay. Well, good. I'm happy to hear that. All right. And do you know how much equity you guys have in the home?
um, so when we bought the house was listed at 550.
Okay.
Then
So,
we talked the seller down to 450. So they took 100,000 off.
okay.
And we closed like in 15 days. We did a conventional. So we did I believe it was what 3.5% down. I don't know. We got a really good deal out of this purchase.
Yeah, it sounds like it. I'm guessing if
We
Go
Go
ahead.
ahead.
Oh, sorry, I was just gonna say, I'm guessing that if it was to be appraised, it'd probably be somewhere near the original price, right?
550. That's what I would like to say. Looking on Zillow though and Redfin, it's very undervalued. I mean, the house is on an acre. It's 2,300 square feet or 20, just under 2,300 square feet.
Okay.
So
If you had to ballpark it, would you say like 100,000 in equity, maybe 80 to 100,000?
yeah, I want to say at least 100,000 in equity. Just looking at Redfin though, the off market value is coming in low though.
Okay.
Because when we bought it, I'm not sure how they reappraised it for less, so it's appraised for less. It's right now coming in at 440.
Okay. Okay. I'm good to know. All right. Now there's just a few different things that we'll go over here. Like I said, at the end of today's call, we'll be either applying for the coverage or we'll be declining it. Either way, my job's to make sure you guys fully understand the programs.
Okay, and then what is it? What is typically what is it? What's the rate on it? What how much do I would it cost me
Yeah, so everybody's situation's a little bit different.
on
100% of my
average?
clients, yeah, 100% of my clients agree that if it doesn't make sense month to month, it doesn't make sense to do. So whatever we look at, we can customize and structure to make sense for you and your wife. I have clients that pay as low as like $15 a month for programs, and I have clients who pay as much as $800 a month. We're not going to do anything that's going to pull any food off the table, but the programs are built to help you guys stay protected while you're still alive, as well as if something does happen to you. What would you say the biggest asset is that you guys have right now?
Oh, I'm sorry. I was telling my son to settle down. He's over here on the virtual reality Oculus, and he's bumping into the wall.
No worries.
Sorry. Can you repeat that?
What would you say the biggest asset that you guys have is?
Definitely family. Family's our biggest. I mean, that in financial terms, it's not our asset, our home, of course, but I mean each other. But yes,
That was the best answer I've heard in my career doing this. That's awesome.
you know what, and you know what, and this is a real serious thing. I was talking to my kids about. I got six boys, and I was telling my kids, you know, the real funny thing. It's just a joke, that we're all going to live together forever. You're going to buy a big, huge mansion, and we're all going to pitch in and pay for it
I love it.
with everybody's income.
Yeah, there we go. I feel like a lot of cultures outside of the US live that way.
Yeah, and that's the one thing I've been noticing. But here in the U.S., it's not common.
Right.
Everybody wants their own house. You know.
Yeah. Well, Luis, like I said, a couple of things that we'll kind of walk through together. Is it just you who's working in the home, or is your wife as well?
My wife, she works on and off. Hang on a second. Give me 1 second, please.
Yeah.
Damien, get away from the. You're gonna break that. Go over there in the living room. All right, kids. Um, sorry. Well, you were asking me.
Yeah, is it just you who's working, or is your wife as well?
Oh no no no. Yeah. So I've been, the head of household. I've been um paying all the bills throughout the year. My wife, she's been uh she's had like 4 or 5 different jobs this year. Um, and so yeah, it's both of us working, but consistently me. I've worked throughout the entire year.
Okay. And so I guess like income wise, you're probably bringing home more than she is, right?
Yeah, unfortunately, yeah.
Okay.
I mean, fortunately, yes, but I'd love for her to make it, as much if not more than me, and then I could be a stay-at-home dad.
Yeah, totally. Um, okay, and I guess if your income was to go away, whether or not you got sick or in a car crash, like you couldn't show up to work and actively work, would it make it a little bit more difficult to make those mortgage payments on the home?
Oh yeah, definitely. I mean, I don't even know how we would survive. Honestly,
Okay.
there's no question about it.
Okay. To take a look at some of these different options here, medically, last 10 years, have you had any kind of diagnoses, ailments?
No, I mean, I have high blood pressure, but I'm seeing the doctor about that. That's under control. Um, I have kidney stones. Those aren't really a big deal. Those are more hereditary. Other than that, no, I don't have any huge medical issues that concern me or would concern my wife or my family, or my doctor for that matter. Um, you know,
Yeah. Okay. All right, good. No prescription medications or anything?
just to control the blood pressure. I believe that, which is also, uh, I don't want to say it's also hereditary because both my parents they have high blood pressure. So I do take, I take a small dosage for it's potassium basically,
Okay.
um, daily.
Nothing major though, like heart attack, stroke, cancer, COPD, kidney liver disease.
No, no, definitely not.
Okay, good, good. And then no like felonies, DUIs or license suspensions in the last 10 years.
No, no, heck no. None of that stuff.
Okay. And did you say you guys had an interest rate at about 3.5%?
No, we got a 5 3/4.
Okay.
I bought down the interest rate because we picked up this house last year when the interest rates were real high. I know they still are, but when we picked this house up, we had just sold our other house in Tucson and moved up here. Being as it is, it was at the height of the whole market craziness, the housing market craziness. So we did um, pay down some of the interest rate, and like I said, we got 5 3/4%.
Yeah. Okay. Well, good, good. All right. And go ahead and grab a pen and paper. I want to make sure you take down a little bit of this information, and I also want to make sure you grab some of the stuff that we're going to be going over here today, okay?
Yeah, give me 1 sec. Let me grab something that is a little bit more sturdier to write on.
Yeah, take your time.
All right, I was able to find something.
All right.
Okay.
So we'll start with my name. That's just going to be Tyler, Tyler.
All right. What was the name of this company again? I found you guys online, but
Yeah, so we work alongside about 35 different companies. Our
okay.
job's pretty simple since we're technically not working directly with one company. We plug your guys' information into a system, and that system's going to generate some of the best options available for you. Some of the companies are Americo, Mutual of Omaha, Transamerica, American Amicable. You've probably seen some of them maybe like online or running advertisements. They've all been around for over 100 years.
Right. I had Mutual of Omaha, my last employer. I had extended life insurance coverage because what I did was so by trade I'm an aircraft mechanic, and at that time I was traveling a lot all over the country and all over the world, going here and there to different job sites to work on airplanes that were broken at the moment.
Okay. So you're familiar with them. Good, good.
Yeah, so like I said, I had the what was it, $1 million policy for life insurance.
Okay, there we go. Yeah.
Excuse me.
Very good. Well, I'm happy to hear that. Um, they're the companies that we work with again. For now, until we know which direction we're going to be going, we can just write down that they're all A-rated. We'll kind of get into which company that we'll take a look at for you in a second here. But since you're
Okay.
so healthy, the main things that I want you to take down, so we'll put a number one there on the piece of paper.
Yeah.
And then we'll just write mortgage and then the remaining balance on the mortgage. So the 420, 420,000. The second thing we'll take down there is going to be the equity. So we'll write down equity and then we'll just put, I know we said ballpark about 100,000. And then the third thing we're going to put down there is income. And what would the monthly income be for you guys?
Our monthly income. Okay, so give me 1 second. Let me pull that up. Um, and I do get the on call. So I do what's called the on call. Uh, I did it twice last month. I want to say it was. All right. So the monthly income, just shy of 10,000. That's gross. Net is actually more along the lines of 7.
Okay. So we'll just put about 7,000 there.
Yeah, because let's see, my last check was 37. Let me see, the one before that was, yeah, right about there, 7,000.
Okay. And Luis, if something did happen to you or your income, would you want the family to stay in the home that you guys have now, or would you want them to sell it and downsize?
No, I definitely would love for them to stay in their home. We moved out here where we're at right now. We're in Mayor. Reason being we moved out here is I didn't want my kids growing up in the inner city. There's just too much. Um, we're all, well. When I moved here from California, I raised them all in Tucson, so they're from Tucson. I'm from California, and so seeing all the stuff that's going on in the cities, I definitely didn't want them growing up in that, and I made the decision to move up here to Mayor, where it's nice and cool. It's not as hot as it is down in the valley or down in Tucson, and the crime is significantly less. So yes, definitely, I want them staying in this house and in this area.
Okay.
Whether once they grow up and the kids, they want to move out and they want to go back to the city, that's totally up to them.
Yeah. Okay. And I guess if something did take your income, like a sickness, illness, or, like we couldn't go to work tomorrow and earn our active income, or God forbid, right? But if we did get hit in a car crash and pass away, um, what would they be left doing to make those mortgage payments?
I don't believe there's anything they could do. I don't know if there's anything they could do.
Mm.
I do have life insurance, but it's with the amount of coverage that I have, 20,000 wouldn't last very long. I mean, I do have funeral benefits, but that 20,000 would barely cover the funeral.
Okay.
So
Yeah. Okay. So, Luis, it seems like it's probably not a matter of whether or not we should get one of the programs put in place, but just which one's actually going to fit inside your budget. Is that fair to say?
yeah, definitely. That's what I'm concerned about.
Okay. So with these three things that I just had you take down, the mortgage, your equity, and your income, these are going to be the three main areas that the mortgage protection programs are going to be protecting. The first thing, your mortgage, if something happens to you and you pass away, this is going to pay out to cover either a large portion or the entire portion of the mortgage. Okay.
All right.
These programs also have living benefits. Okay. So, what that means is that if you did get chronic, critically injured, chronically sick, or terminally sick, this program is going to pay out a large portion of the death benefit. So you guys can use that money and use that policy to make mortgage payments, even if your income disappears. So if you're out going out for a late night snack to Taco Bell and you were to get hit by a teenager who's texting and driving and they like swerve into your lane and end up hitting and killing you, or excuse me, not killing, but you know, you're still alive, but you're in critical condition and something that's out of control and you know you can't go to work the next day, you'll be able to access a large portion of the money inside the policy to continue to make mortgage payments. Okay.
Yeah.
And that works the same for all three: critical, chronic, and terminal illnesses. Some of the major things that we see with people around your age, just 37, is it's likely not going to be a death that comes into play. We want to plan for the worst. That's why the death benefit and the entire mortgage will be taken care of. But also, something that takes a lot of Americans these days is our health and getting sick, terminally ill, critically hurt, right? And this isn't a program that's going to be able to cover those areas, okay?
Okay.
So, with that being said, we have equity down here under mortgage because the equity is going to be able to get protected if the family did have to sell the house and downsize. The last thing we would want to do is give that equity back to the bank, right? Instead of them missing the next mortgage payments and then the bank coming in and taking the home back, that's equity that you guys have built up. And as time goes on and you guys stay in the home, that equity is going to grow. And that's your family's money. So we want to make sure that your family is going to keep that equity, okay?
All right.
The third thing, your income, like I said, this is going to help the programs that we'll look at will help put money back into the home if something does happen to you while you're still alive. And that way we don't have the family left, you know, on the phone with banks and lenders trying to figure out how they're going to stay in the home if something happens to your active income, okay?
All right.
Any questions on all this stuff so far?
Yeah. I've heard the most basic stuff that you covered, but what happens if I lose my job for whatever reason, I get laid off because the economy slows down or something like that? Or what about how big of a burden of proof do I have to prove that if the accident was you know there was no witnesses or something and there was a hit and run or whatever, and I'm left on the side of the road and I'm in a coma? How big of a burden do I have to prove that I'm not at fault?
Yeah. So I'm going to be working with you guys every step of the way and from here moving forward. You're not going to have to go call any companies or wait on hold or any of that. So anything that you guys do need, if this is a situation, right, where your family's going to need that money, they can just reach out to me. I'll make sure that the money gets sent out to them. Again, this isn't something that we're going to have to wrestle a company for. All we're going to have to do is submit everything properly to them, which I've done many times. And as long as it's, within the realm of the critical chronic terminal illnesses, we'll be able to make sure we get that payout for them.
And what type of chronic illnesses are covered?
So let's take a look. Anything like heart attacks, strokes, cancer, critical injuries, those are a few of them. Let's take a look here.
you know, ex coworker of mine, he had a really bad back injury, and he had to have several surgeries to the point where he was unable to go to work, but he was still forced to go to work uh, because he didn't have any sort of medical coverage, I guess, for lack of a better term. Really not sure how to describe his situation, but I knew that he was still having to show up for work, and it was just, it put him in a real bad spot.
Right.
Would back injuries be covered? Say, for instance, I hurt my back and had fuses, several vertebrae fused together, or whatever. Would something like that be covered? You know.
Yes, they can be if it's a critical injury. Here's a couple of them. Cancer, stroke, heart attack, blindness due to diabetes, kidney failure, or major organ transplants. Those are just a couple of the critical illnesses that are listed. Um, there's a few different terminal illnesses that are listed as well. Let's see here. All right, let's see. Diagnosed with brain tumor, life expectancy is less than 12 months, injured and has to undergo medical treatment. Anything along the lines of that, that's included in the terminal illness bucket.
Okay.
So the big thing with these are number one, again, we're going to look to protect a large portion of your mortgage. The biggest that we can find that makes the most sense for your income. Like I said, if it doesn't make sense month to month, it's not going to make sense to do overall. Now, on
Right.
top of that, if we have equity build up in the home, then we want to make sure the family is going to be protected and that equity is going to be able to stay inside the family. And again, the third thing, of course, the mortgage month to month with your income, if something happens to your income and it's within that realm of the critical, chronic, and terminal illnesses, we'll be able to make sure your income gets replaced so you can keep on staying in the home. Okay. All right. So with that pen and piece of paper, I want you to take down a number 4 as well. Since your health is so good, these programs typically will outlive them. And when we do outlive them, that means that all the money that we put into them doesn't go towards any benefit. Except now that these programs have they've increased one of the benefits of them. That's why we're putting a 4 there. We're going to write cash back option there as well. Okay.
Okay. Cash back option.
So we're going to get a full refund of all the premiums that you put into the policy.
Okay.
So if you make out like a bandit and in 25 years we're still alive, which is the goal, then you're going to get a full refund. Okay.
All right.
Now, typically we call that free, right? Because it's like an advanced savings account. It would be a tax-free check that gets sent back to you. Okay.
Okay.
Now, there's a few different directions that we can set these programs up. What most people do is we'll set up a program in a way that you'll get advanced the cash back from the policy a couple years before your mortgage is actually up. So you can use the return to pay off the mortgage a few years early. Does that make sense?
Yeah.
Okay. So there's a couple different options that we can look at. And again, we want to make sure we're choosing an option that's just going to be comfortable and inside your budget. I know that it's really not a matter of whether or not we'll choose one of the options. So I'm going to give you the 3 that are pulled up right here, and then we can walk through these together. Whichever one makes the most sense, we can get structured and customized for you. It only takes us a couple of minutes to get everything put together, and we can make it make sense for you on your side, okay?
All right.
All right, let's take a look here. So I want you to write down, we'll take down 300,000. We'll,
Okay.
we'll write down 250,000. And then we're going to write down 200,000.
Okay.
Now we can move these up or down. And I just want to make sure you said non-smoker, or are you a nicotine user?
No, I'm not a smoker anymore. I used to smoke when I was younger, but I quit.
Okay, good. How many years ago?
Uh, let's see, about two years ago.
Okay, very good. Good for you. So for the first one we have there, the 300,000, that's going to be how much would pay out if you passed away. And you're going to get back at the end of that $78,000. Okay. It's a 25-year program that's going to return you $78,000 at the end of it. And the monthly amount is $262 a month.
Okay, say that one more time. I'll get 78,000 back
You get $78,000 back at the end of it.
if
The
I pay all my premiums for 25 years.
25 years.
Okay.
And for the whole 25 years, you have protection that'll pay out tax-free check to your family and the living benefits inside the policy.
Okay.
For our second option, for the 250,000, that's going to return you $65,000 at the end of it. And that one's going to be $219 a month.
And you said it was 65,000.
Correct.
All right. This is the first time I've heard you say a monthly premium.
So the 300,000 is $262 a month.
262 a month.
The $250,000 option, which returns 65,000 at the end of it, is going to be $219 a month.
Okay. So 219 a month.
And then a $200,000 option would return you $53,000 at the end of it.
Sorry, say one more time.
It's going to return $53,000 at the end of it.
Uh,
And the monthly premiums for that one is going to be $177 a month.
and you said the return was 53,000.
That's correct.
Okay.
Now for
And then you had said that it was 177 a month. Okay.
now for all
And then one more question: are these going to? I mean, inflation 25 years from now. I don't know if you've seen what's been going on lately with this inflation. Groceries alone, a year ago, a year and a half ago, a normal family with normal income of say 78,000 a year was paying 48,000, or sorry, $48. I want to say it was every 2 weeks for groceries. That's doubled within the past year and a half. Is any of this going to be, in 25 years? Is there going to be I guess like a reevaluation of, cost of living and inflation recalculation? Because $300,000 right now, it's a a good chunk of money. But in 25 years from now, 300,000 may only be worth 100,000, 150,000. You see what I'm getting at?
Yeah, absolutely. The main goal with these programs is to make sure the family can stay inside the house, right?
Yes, of course.
And so the 300, the 250, the 200, even if we wanted to do a $400,000 policy, the main goal would be to help make those mortgage payments. So for all three of these options, they would be able to make mortgage payments for years and years and years and years if something happened to you and you were to pass away. Now, if something happens,
The insurance company wouldn't directly make the payments. The payments would be given to my beneficiaries, whether it's my wife or my children, and it's up to them to make the payments. Is that correct?
yes. And if we were to help you create a will, you can instruct them on exactly what you want them to do with the money, which legally they would have to follow. But yeah, it's a tax-free check that'll get paid out directly to them 24 to 48 hours after that death claim would get submitted.
Hmm. Okay.
So with the three options here, which one would make the most sense to start with?
So the 200,000 if I died, 53,000 at the end of the term, 177 a month. I mean, either one of these, we're still 120,000 short.
You want to start with a bigger one? Because we can
No, I'm
always
just
come
saying.
back and add on more.
I'm just looking at the numbers here, and no matter what, there would still be. I mean, okay. I'm just trying to be realistic, but I guess there's still going to be a void there. There's still a void there that nobody's going to fill.
So as time goes on and you pay down the mortgage, it's not always going to be the 420,000. Now, let's just say that we started with the $200,000 option. That would give you half of the mortgage payments to be able to pay the full 420. Do you think that 15 years would be enough time for the family to figure out the next steps to make those next 14 years of payments?
I don't think so. I think that they'd get used to it, and then by the time those 15 years come around, they wouldn't know what to do.
Okay. Can I ask you a question?
What's that?
Would it make more sense to take the cashback option off and then have a higher death benefit for a lower cost?
Yes, definitely. I mean, so the whole point of it is so they, whether they is to protect them from having to be left out in the street in the cold. You know what I mean? The cashback option, I'm not worried about that. That $53,000, I can, I can work overseas and make that, you know, quickly. It doesn't matter to me. I mean, or if I even chose to sell the house, I can make that money in no time.
Okay.
$53,000 to me, doesn't seem like it's worth waiting 25 years for 53,000.
Yeah. So for a little bit less in cost for the full mortgage protection with the same living benefits with no cashback option, it's just going to be $168 a month for the full 420,000 in coverage. Does that sound like it makes a little bit more sense?
For the full 420.
Correct.
Okay. Okay. And if we did the 200,
With no cashback option?
correct.
Let's take a look. The 200 would just be $84 a month.
Okay.
Is that
And
a
then
good
with
spot?
taxes, is there any taxes that are included or fees or processing, paperwork or anything that they have to pay now?
No, it would just be the original 84, and we can customize and structure it to make sense for you with month-to-month payments as well. Okay.
Okay. And that would be direct, was it auto pay out of my bank account or how would it work?
Yeah, directly out of your account, so you don't even have to worry about it.
All right.
Can you just verify your date of birth for me? I know I have you at 37 years young.
Yeah, June 11th, 86.
All right. And you'd want to start out at 200, or would you want to go for the full 420?
I'd like to start out with a 200.
Okay.
No cash back after, whatever you call it, that payoff incentive.
Okay. Perfect. And can you just verify the spelling of your first and last name for me?
Luystores.
Okay. And then ballpark on your height and weight.
5'8", 225.